My guest today is Heath Wilson, and thanks Heath for joining us today. So Heath, you were here in Knoxville in college, 92 to 96. You were you got a finance degree, and so welcome. And now you're back in Knoxville. So I know you lived in Atlanta for several years. You've been back in Knoxville for a year or so. So welcome to my series, and also welcome back to Knoxville. Welcome back to UT. Thanks for joining us today.
Yeah, thanks for having me. I'm from East Tennessee, grew up in Johnson City, so this is pretty close to home. And my years in Knoxville were good memories, so it drew me back apparently.
Yeah. Well, awesome. So I know that you've done a few different things after college, and we'll get to those sort of in piecemeal. But I know that kind of a theme for what you've done is both sort of entrepreneurial type stuff and things that are loosely related to data and information and aggregating it and getting pieces of information from sort of where they originate to where they need to go. But before we get into kind of the bulk of what you've done, let's just go back to your first job. So you graduated with a finance degree, and so I know you did something in sort of the investment services type space. But could you talk a little bit about what you did starting out?
Yeah, so actually my first job was a quick stint in Chicago, worked for a small investment firm, and they quickly realized I wanted to be back down south to some warmer weather. So my first, I guess, real job where I spent a bit of time learning was for a institutional consulting firm, which exposed me to call it the defined benefit, defined contribution, endowment foundation, really the institutional investing space. And that was something I studied in school for maybe a chapter, but not enough to really understand it. So it was a deep dive into all things institutional and how those institutions manage money and think about liabilities and all the things surrounding that. So it was a great kind of first experience just to understand how that part of the world worked.
Now, in a previous interview, I talked to Carissa Dunaway, who works in the pension group at Oak Ridge National Laboratory, and so just to kind of provide some context. So I think what we're talking about here is we've got employers who have retirement plans, and so those retirement plans are typically going to be structured either as defined contribution or defined benefit. And so we got into those terms in a previous discussion. So for my viewers, you can go back to that to see what's going on. But kind of at the end of the day, what we've got here is we've got some employer who wants to provide a retirement plan for their employees, and the employer themselves is likely not going to actually do the investing in that plan or
Right.
or run the mutual funds that the plan participants that could select. So instead, they sort of outsource all or part of that to someone else. And so when you say institutional consulting firm, I know that you're somewhere in that. This was somewhere in that mix, but where exactly did your first little stint? Where did y'all sit in that?
I like to think of it as, if you were to look at your own personal assets, you might want someone to help you, manage those and give you recommendations on, am I buying stocks, bonds, something else in between. So this is, whereas, you and I might invest $50 a month or $500 a month, these institutions with pension funds are investing 50 million or 500 million. So we were at this point helping them decide, all right, you have this big pool of assets, and really it's just a pool of assets. And whether it's for retirees or whether it's for, university, it's a pool of assets that at some point will have a purpose, down the road. And you're deciding, all right, when are you going to need access to that capital, those assets? And if, based on that, how do we help you grow that? How do we help you maintain that? And, essentially at the end of the day, it becomes just an asset allocation question, but it's a bit more complicated than that. And you're just saying, all right, well, not just do you you want to hire someone that manages, public equities as an example. Are they domestic equities? Are they overseas? Are they global? What type of manager do you want? What's the connectivity in terms of the relationship that you want with that manager? So there's a bunch of different questions they were trying to answer, and we sat as the advisor, I guess, for lack of a better word, consultants, in between that institution and the people that would actually manage the money. So we didn't have any money. We didn't manage the money. We just kind of helped them understand who they might outsource that to.
Yeah. So this, I mean, this in and of itself is a huge business, right? Because, I mean, if you just think about all of the employers in the world that have some sort of retirement plan that they have to manage. And so somebody's got to be sort of a go-between for those companies and the investment managers themselves. And so I imagine in this type of work, I mean, you're in the middle of you have a tremendous number of relationships, right? Because you've got the employer side, whether these are private sector companies or public entities or whatever,
Yeah.
states and local municipalities. And then you've got the investor, the investment manager side. So you're kind of in the nexus of a tremendous amount of information flow. But
I don't remember the numbers, but I want to say maybe 10,000 asset managers worldwide, and that spans everything from private equity to public equities and fixed income and in between. And then, like you said, there are not only public funds and corporations, but sovereign wealth funds and family offices and ultra high net worth and endowments and foundations, all kinds of big pools of assets that need this type of advice.
Yeah. So then in that job, and there are jobs very much like this today that many of our students could get into. But in that job, what was your day-to-day life like? What type of stuff did you do on a day-to-day basis?
Yeah, well, remember this was late '90s, so a lot of your students were maybe not even born yet, being close to born. But a lot of our work was done on spreadsheets. We didn't. The web was just becoming a thing at that point. So all of the data that we captured from asset managers. So if we would go to, let's say, Goldman Sachs or Morgan Stanley or Invesco, those might be some names that people recognize. To get information from them, we would request it via, kind of simple information request, but it came in the form of a spreadsheet, and then we collate that and then compare and do all the work around that. But it was very manual. And even back then, I mean, this will sound ridiculous, but we would even send faxes and ask for performance updates via faxes. So it was just a very archaic, hard to believe, actually, in today's information world, that this is how big $500 million decisions were being made, on the back of a napkin in some ways. So I kind of sat in the middle and gathered all that information, collated, aggregated, compared it, and then we'd put together, lengthy reports for our clients and walk them through that.
Yeah. And from previous conversations with you, though, I know that this situation for you personally didn't last terribly long. And I know that you have much more of an entrepreneurial spirit in you to begin with, but you quickly transitioned right out of that into something else. And so let's talk about that now. What changed and how did that play out?
I like to think, or I like to call myself, an accidental entrepreneur. This was 1999, which, we look back to the history books, was the dot-com craze bubble, turned out to be the bubble. So, at that point, a lot of kids, honestly, young adults, were starting businesses, and it seemed like it was pretty easy. And this was at a point in my career where I could have gone to graduate school, look for another job, or start a company. And I think we realized that what we did at my prior company was pretty outdated, and there had to be a better way. I think that's how a lot of businesses start. You see this problem, and then you decide that there's got to be a better way. So a couple of my buddies that I worked with, we went out to lunch one day. We said, "Hey, there's literally has to be a better way, and why don't we write a business plan to try to solve that?" And that was really the genesis of it. I didn't set out to be an entrepreneur. I think we kind of viewed this as, well, let's go try it, and if it doesn't work, we can get a job, hopefully. And it just turned out that we had a good idea, and technology accelerated at the time that we were starting this business. So we kind of found ourselves in the right place at the right time, and also with kind of an interesting idea for a specific niche in the marketplace.
And so what was this new thing that you did?
Well, I mentioned the spreadsheets, right? So again, we would give you an example. If we were doing an equity search for a client for $50 million, we'd send out spreadsheets to 200 asset managers. We'd get that back in, right? And then if we were doing the same exact search for a different client next week, we'd send out 200 spreadsheets. So it's this very repetitive, laborious process. And we said, well, hey, wouldn't it be nice if we could capture all this data on this new thing called the web? And instead of throwing it in the spreadsheet, we built software on top of that data in this new thing called the web. And you just had access to everything real time instead of having to, have it be delayed. And at the time in the marketplace, there were databases, but you had to wait for a CD-ROM to come in the mail. I mean, it was just, again, it's hard to even have this conversation, in 2021, but it really was an old, slow process. And our thought was, we think that, the web at that point was more for browsing and, selling things. And we thought, actually, I think it could be used for analytics and for data, acquisition. And that's effectively what we did.
Yeah, I think it's cool that you started with a great fundamental understanding of a process. You understood what the investment process from sort of start to finish looked like for anyone with a retirement plan, for example, and you recognize what was good, what was bad, where the inefficiencies were, and found a place to add value. So this was right around the turn of the millennium, I guess. And so you started a new company, right? So what was that company?
Company was called eVestment, and really the idea was that if we could make it easier for all the parties in our industry to share data, right, to give data back and forth, that we could create a platform that just made it easier to make investment decisions. So again, we created a much more efficient means and way for asset managers to provide that information, a better way for the institutions and the pensions funds to analyze that information, and for consultants like we were, or advisors, it gave them the tools in order to help their clients make better decisions. And interestingly, at the time, I'm sure a lot of your students will appreciate this idea of a network effect, where every new client and every new data provider helps build the network. You see this in social media, of course, but we were really early on to this idea of a network effect. We knew that the more data we had, the more clients would use it. And it just started to build upon itself, in that more data, more clients, more data. It was this beautiful, beautiful network where it just made it so much easier to gather the information we're looking for. Because this isn't publicly available data. You talked about mutual funds earlier. You can go get mutual fund data, as soon as we log off here, a couple seconds. This private information actually has to be provided by, the asset manager themselves. So it's pretty difficult to get your hands on it. So we had to provide an incentive for them to give it to us, which was that client base.